All right. Welcome to the Hecht Report number 4.
Thank you, Tim. As always, it's great to be here.
It's great to have you here.
Yeah.
So on Sunday night, I got the weekly Sunday email from
Yes.
Michael Hecht,
Yes.
the dose of good news and happiness. And what struck me about this is, as we are entering March, the month of innovation and entrepreneurship and new thinking.
Yes.
New Orleans Week, Tulane Book Fest, the Venture Summit,
Third Coast Venture Summit.
The next couple of weeks will be tons of activity. A report that you sent out, which I thought was interesting, I'd love to chat about. Flippa,
highly esteemed, incredible website.
Flippa, just released an analysis of the National Science Foundation and PitchBook data.
Okay, that sounds more credible. Now I'm listening.
Showing the states with the largest growth in venture capital investment over the past decade.
Okay. Yeah.
And I quote from Flippa. Louisiana comes in at number 6 in the nation.
Okay, I'll take
with
it.
a 10 times increase.
Okay, what do we go with? From like $10 to $100? What do we go to?
It's a trend. We're all talking about trends.
All right.
So with that being said, let's just start the conversation here. And obviously where we've come, where we are, and where we're going. So tell me what you're seeing.
I think the reality is, and everybody knows this, that venture capital is super concentrated in Boston, New York, and the Bay Area, not even really in Austin. It continues to be so, and it's a real struggle to get investment capital in other communities. We started working on this, Tim, about a decade ago, and at that time, I think we had it was something only like $25 million annually, the whole year in New Orleans. According to the report, last year it was I think
324.45 million.
Okay, we'll call it 325, and I'll owe you one. On one hand, you might say, well, okay, that's just because we were working off such a small base. But on the other hand, I would say it represents real, demonstrable progress. We were just allocated $113 million of federal treasury funds that are now going to be given out by over a dozen organizations around the state. As we've talked about before, we're beginning to see exit activity. I actually had coffee today with Patrick Comer, who had one of our first $1 billion exit a couple of years ago. And so this is part of a growth cycle. And I think what you're beginning to see is that it's not just our efforts paying off, but also I think investors are realizing that when they're operating in these super competitive markets, returns are just being squeezed down to almost nothing because there's just so much money there and so many people chasing deals. So you can go to these secondary and tertiary markets, and if you're smart about it, you actually can get outsized returns for your partners, for your LPs. And so I'm hopeful that what we're seeing in our market here is not just that we have indigenous activity from, groups like Benson Capital and the New Orleans Startup Fund and Boot 64, but also that people are recognizing that it does pay to go to some of these less picked over markets.
Yeah. But 324 is not just local. So obviously that's money that's coming in.
Correct.
So from your opinion and what Genoic is doing, why is New Orleans or the New Orleans region an investable asset? Why should I invest in a company in New Orleans?
Yeah.
And what are the advantages of this ecosystem to support this company? Or are they by themselves on an island?
I think there are probably three main advantages coming to this market. One is that what we just said, there's just less competition for deals, so you're going to get better terms pretty naturally. The second is that there are some things that are happening here that are specific and intrinsic and foundational to this market that are very exciting, particularly now in clean energy technology and the energy transition. There was an article in the Journal a couple of days ago that said that energy transition investing was $1.2 trillion last year and is expected to go to $5 trillion in 2030. A trillion's a big number. And a lot of that's going to happen in Louisiana because of our history in energy, because of our particular geology with places, for example, for carbon capture because of our pipelines, because of our know-how, um, because of some of the products that we're already making here that require things like hydrogen. And so I think that if you're looking, for example, in the clean energy space, there is a natural advantage to being in Louisiana. The third one is that there is a cost arbitrage, not just because labor is less expensive here in land and electricity, but also because in the tech space, for example, we have the deepest digital media incentive, software incentive in all of North America. You basically get a quarter of your money back, 25% of your money back free, regardless of your spend, regardless of your profitability. So the way that I describe it to companies that are thinking about investing is that your money goes 25% further in Louisiana, and that's non-dilutive. So it's really just a margin that you can arbitrage by being here.
Mhm.
So part is less competition, part is intrinsic advantages, and part is that there's a cost and incentive regime right now that if you're smart about arbitraging it, you can consider it as a de-risking mechanism or as a profit-enhancing mechanism. No matter how you slice it, it comes up peanuts.
Let's talk about the capital stack. You mentioned Patrick sold his company for 1.1 billion. Scott Wolf sold his for 500 million, about 2.8 billion. So there's some
Right.
liquidity.
Mm-hmm.
You have Angel Networks, you have Benson Capital. Now you have $100 million of Series A type of money. So we're starting to build a capital stack,
Right.
early stage. The next problem or opportunity is retaining companies that grow.
Mm-hmm.
So what do you see? I know there's situations where companies are starting to scale. They need Series B, Series C.
Yeah.
They need to hire 500 people. So thinking about the what if it works as this capital starts to be invested, what's the next problems or opportunities this ecosystem is going to have?
Well, you just nailed it. It's going to be going downstream and finding enough later stage capital, finding enough employees, finding enough customers so we can keep the companies here.
Yeah.
And that is going, the metaphor that I can't get rid of is that we're trying to build a sandcastle by the seashore, and we're trying to dump enough sand on so that we keep building up even as it gets taken away by the tides of California and the Northeast. And I don't think there's any way to really get out of that challenge. And it is a real challenge. I was, reading the piece in The Economist last week about how companies are starting to decamp from Miami and go back to San Francisco. And you read that? Oh, it's super depressing because
why?
Why? Because the reason is that San Francisco, despite years and years and years of cynical, malicious, self-serving, bad management, I mean, doing everything possible to kill that city, they can't kill it because there's too much money there. There's too much research talent there in the universities. There are too many companies there. There's too much VC.
Yeah.
And so these folks who went down to Miami so they could be crypto bros partying on boats, right, with Mayor Suarez with his Chanel belt and his and his loafers, they're like, well, that was fun. And now we're going back to San Francisco where all the money is, all the research talent is. And by the way, because we're rich, we can buy our way out of the inconvenient thing like people dying on the streets.
Yeah.
And I thought it was sobering not because I was rooting for Miami, but man, Miami had a lot going for it, or it does. You've got a tax regime people love. You got a governor who for a while was very, very effective. You've got a mayor who was kind of telling this story. Folks are all about it on the, on social media. And so if in fact, even that's not going to create enough gravity for it to stick in Miami, it means that there is going to be a challenge overcoming these legacy cities. Now, doesn't mean we shouldn't attempt it. It just means that we have to be realistic that it's going to be the cha-cha of progress, 2 steps forward, 1 step back.
So what would be 1, 2, 3 for this region to say, okay, for us to break out, and we're not going to be a Miami, we're not going to be a Boston, we're not going to be a San Francisco. What 3 things do you think the New Orleans region could do now,
right,
to move us up the mountain?
Well, let me. We were talking about this analysis today, and it speaks to this question. So one of the interesting things about the post-COVID world is that it has benefited a lot of secondary cities. You've seen it. We were talking about Greenville, South Carolina, and Charleston, and what's happened is that those places are booming because people who were in Atlanta are now finding that Atlanta is annoying and expensive and full of traffic. And so they're now going up into South Carolina. You're seeing the same thing happen in secondary cities, all around the country, in Chattanooga, in Wichita, in Santa Fe. That hasn't happened in New Orleans. And I think that speaks it should, but I think it speaks to the first thing, which is quality of life issues, right? Which is safety, crime safety, flood safety, and also cost of living. If you don't have that first level of Maslow's hierarchy and needs on lock, people are going to want to come back, but they're just going to come back for Jazz Fest or Mardi Gras to visit. So I think the first thing we have to do has nothing to do with tech or investing. It has to do with giving people the conditions where it's reasonable for them, to live here. Then you go to the next thing let's look at South Carolina that they did. They were very good at embracing innovation. First auto manufacturing in the 80s, and now EV manufacturing right now. That innovation means that the fastest growing industry or workforce sector in South Carolina is the knowledge economy. Okay, average salary of somebody in the knowledge economy in South Carolina is $102,000. Fastest growing sector in Louisiana is hospitality. Average salary, $32,000. That's the whole story. They place their chips on diversification, growth, and innovation.
Like who's the they that needs to get it here? Who's specifically?
Yeah. Who is they? That's a good question. It's like when people used to talk about like the market when we were growing up. What's the market?
But who's the
like
they?
When you're
who's
in
the they
church
when
and
you
like
sit down, have a drink, and say, "I need you to embrace it." Who's the they?
So it typically is state government leaders who are deciding to make those bets.
Like the head of LED?
Head of LED, the governor. I'm not as familiar with South Carolina, but if you look at Virginia and North Carolina and Research Triangle Park, RTP in North Carolina was a 3-term governor who said this was going to be my legacy.
Yep.
We're going to go from tobacco and building durable goods to being a tech and biomedical powerhouse, and it made it his legacy to do that. So I think it requires executive leadership, absolutely. Then it requires really good institutions. So, for example, in South Carolina, one of the things that's really pushed them along is a relationship between BMW and Clemson.
Yep.
Right. So Clemson has been, a big part of that. And then lastly, I think it is organizations like GNO Inc., Nieux Society, these intermediary kind of catalytic organizations that sustain a message and sustain a movement over time. Mm-hmm. It's all those things, coming together.
So going down that list, one is I've been impressed by what Tulane's doing, Mike Fitz's commitment, and Kimberly Graham, and what UNO and Rebecca are doing. So universities are leaning in.
Yeah, I mean, what Tulane is doing,
they're leaning
downtown with the Innovation Center, the redevelopment charity is critical. It's similar to what Penn did downtown Philly or what ASU did downtown Phoenix.
They're betting on it.
Right. If you look at what's happening at UNO with the beach, that's been an intentional rebranding to lean explicitly towards innovation.
And wind and
Exactly. They're going to have the new energy center. So the universities are a real part of it. And also our HBCUs are leaning into it as well. Particularly Xavier and Dillard are part of the OHUB movement. OHUB has a new incubator that is incubating minority-based businesses, minority-led businesses that are in the new energy sector.
Yeah.
And then you put all this stuff together, and over time you tend to get this type of movement. And it seems, meager at first, but, you can think of all the annoying metaphors, from a drop a mighty stream, from an acorn a mighty oak, or just, to use that analogy, the best time to plant a tree is 20 years ago or today.
Well, it seems like the seeds are planted and now growing. So if you look at that list of folks, there's different folks in the ecosystem. The universities are playing and engaged. We got exits.
Yep.
That safety thing. Do you think the governor, seemingly he is saying we want to make this place safer, not knowing all the politics going on? What's your assessment on safety as a priority, both locally and statewide? How do you feel about it?
I think, look, when you talk about stuff relative to New Orleans, I think the things the governor are doing are just right. Most of it's just right. Some of it's weird, but putting Troop NOLA here is a great idea. We need more manpower. Setting up this task force to look at sewer and water board is great, because sewer and water board is performing just as it's structured to fail. We have a drainage system where one entity is responsible for the small pipes and one for the big pipes. That is like the epitome of built to fail, right? It's why we had the Mardi Gras flooding, because somebody forgot to remove the bead buddies, right? The fact that we have bead buddies is weird enough. And so I think that the governor is going in and doing things almost like Giuliani did to some degree in New York, when he was there, that people might kind of tisk at, but overall is shaking things up in a way that's probably going to be positive.
Mm.
And then look, in safety in general, that we're doing well, or much better. Last year we were down about 30%. This year we're down at about another 30%. Still not close to what we need to be, but we're twice ahead of the national trend in terms of safety. So I'm cautiously optimistic. I do think, though, that fundamentally, all the stuff that we're doing with the investment, all the stuff that's happening in places like Nieux Society, if that foundation of quality of life is not what it needs to be, it's damn hard.
It's not gonna work.
It's damn hard. Yeah. And look, that's why people don't live in Houston or Atlanta or Charlotte because it's exciting or beautiful. They do it because it's fine and because they can visit a place that's exciting and beautiful.
Mm-hmm.
Which is the inside of your mind, Tim.
All right, Michael, let me ask you. This is the final question, unless we have other questions, probably from the peanut gallery out here. It's 2026. The Super Bowl has gone and come.
Right.
Come and gone.
Mm-hmm.
Or either or. The Saints won that Super Bowl.
That was
in
nice.
the hometown.
Yeah, that was great. Yeah.
We wasn't it great?
Yeah.
We've elected a new mayor.
Yeah.
And Flippa has just issued a new report.
Yeah.
And that new report has just hit the presses about the venture capital, state of the venture capital in New Orleans and Louisiana. Give me a vision what you think it's going to be.
Well, I think what it's going to be, if things continue on the current trajectory, is that number of 325 million will go up to over $1 billion.
Okay.
You'll see that continue to grow.
$1 billion of capital.
Yeah, of investment annually, right. We're still not going to be anything close to the big guys, but we're going in the right direction.
Good. That's a good number.
You're going to see real traction at Tulane and our other universities, UNO or HBCUs, in the areas of energy and innovation. But I think here's the thing that's most important. If we're successful, then Louisiana and New Orleans will have a brand as the epicenter for the all of the above clean energy transition for the country. And as a place that has the buzz that we had back in 2010, 2013. I was talking to Tom Murphy, who's the former mayor of Pittsburgh, who kind of took it from being a dead-in-the-water steel town to being the robotics capital of the country and one of the tops in the world. And he said, Michael, there are 4 types of cities. There are global cities like New York and San Francisco. You can't kill them. They're just juggernauts. There's just too much density. They're like a nuclear reactor, right? Then there are dead in the water cities, like to say Gary, Indiana, to pick on Gary. It's going to be hard to revive a corpse. Then there are legacy cities, which are kind of seen in beloved but old-fashioned terms. And I think that New Orleans these days feels like a legacy city. Yeah. Pittsburgh, right, is still kind of seen as a legacy city, despite the fact that Google is there and Meta is there and Waymo is there, because it just hasn't shed the steel, image. And he said, what you really want to do with your city is to become a buzz city. A buzz city is not a legacy city, but it's definitely more, it's not a global city, but it definitely has more natural energy around it than a legacy city. So Austin, Nashville, Miami. These are places where people, when they're leaving California and New York, it's in their decision set organically, not because they went to Tulane or their wife went to Loyola. And I think that if we're successful by 2026, coming out of the Super Bowl, New Orleans will move once again, as I think we might have been a decade ago, post-Katrina, from being a legacy city to a buzz city. And that will allow us to attract and keep the talent and the companies in the capital. And that makes the flywheel spin a little bit more forcefully.
So you see 2026, from Taylor Swift to Trombone Shorty. I mean, from that. No, if she's coming with October 24, right, which is bigger than the Super Bowl.
Yeah.
And then Jazz Fest is in May.
Right.
You've got the Sugar Bowl, Super Bowl, Mardi Gras, New Orleans Entrepreneur Week, Book Fest, Fred Quarter Fest, Jazz Fest. That's 8 months of buzz building.
Right.
I think we're ready. Are we ready? Are we ready to tell our story?
We are not as ready as we should be. We are getting ready. We've kind of hit the panic button. We're having meetings on this now on an almost daily basis. We know that the governor is really on it and pushing it. The Saints are really on it and pushing it. GNO Inc., New Orleans and Company, where I'm going now.
Yeah.
We're cleaning up downtown. We're working with the media. So I think that we're gonna get there. I wish we were doing this 2-3 years ago.
Yep.
But I think we're gonna get done what we need to get done in time. Yep, I do.
So this cycle, we had 2.8 billion the last cycle.
Mhm.
What's the exit number? And exit shouldn't be the only measurement, but let's just use it for this. What would be this next round with $1 billion a year invested? What would be a number you think of exits if?
Oh, I don't know, but I think you'd like to get to the point where $1 billion exit is not exceptional anymore, where it's
Right.
just a nice big exit, right?
Right.
Where it's kind of the standard multiple that we're seeing. I wouldn't be surprised if in 2026, if we're in a good cycle of M&A, that we see 2 or 3 of these $1 billion exits, and we get up to a $5 billion total round.
All right.
You gonna hold me to that?
We got $1
want you
billion
to.
of capital, $5 billion of exits,
Mm-hmm.
and we will be dancing in the streets.
We'll be dancing in the streets as we
Anything
always do.
final that you'd like to say on the Hecht report?
No, but let's keep coming back to this. Again, I know that it's easy to look at these numbers and say that's just math. If if you start with that small, of a denominator, you're going to look good. But it's directional progress, and it's significant directional progress, and we should celebrate that.
Well, the trend line's up.
The trend line is going up.
Okay.
Yep.
Michael,
it's my hockey stick.
As always, thank you very much.
Thank you, Timothy.
All right.